how did you guys hear about us?
I've been here.
Yeah.
From Ballsville. This is Amanda.
Amanda?
Well, I'm on the Bitcoin Bed show.
Oh, are you?
Hear your name and your
Okay.
I follow.
Oh, nice. Yeah, thanks for coming. And I haven't seen you before.
I was in the Culver's drive-through.
Oh, you did?
The first crypto
Yeah.
world. I was like, I should check that out.
So we should give
So I did that.
Culver some credit for getting you in here.
Yeah, right.
So what's your name?
I'm James.
James, and yours?
Amanda.
Amanda, thanks for coming. So we are on YouTube right now live, so we have some folks on there. Every Tuesday morning we have Crypto Over Coffee. And today we're going to talk a little bit about staking. It's an important topic for us because it's something that we're going to turn our stores into, our staking nodes. So we're doing these events, free events, the Crypto Over Coffee, we have Bitcoin Over Beer. We're educating folks about the topics of crypto. And then down the road, we're hoping that more folks would stake with our node, right? So if you're getting the same rate at a random node, you don't know who the owners are. Like Cardano, if you're getting 5% staking in Cardano right now, why wouldn't you stake with Crypto World? Because you're helping us, you're helping the community, and we're allowing to have more events like this. So that's on the roadmap for us, is to be able to do that. Make sure
Do y'all have a coin right now?
we don't have a coin. So we talked about maybe an ICO, but there's so much controversy with ICOs that we decided to go against it for right now because of regulation. It might be something down the road where the government, just once we figure out the regulations start for the government, what they're going to roll out, might be something we add to it. What we are doing though is we're looking to expand Crypto World into more locations. We have we're planning on opening one in Illinois, over in Edwardsville area is on the roadmap. So we are doing a WeFunder campaign. It's a crowdsourcing, crowdfunding raise. We're probably going to raise close to $5 million. We'll give you guys more details on that as we go, as we move on towards that. We're building we're currently working on what that would look like as far as an investment package. But most people that we've been talking to, they're very excited about what we're doing. We're the first one in the U.S. doing anything like this. And to be able to add on, the things that we do here, the education and also the staking is going to be pretty big. I think we looked at the numbers. Node operators last year made about $18 billion in just setting up as a node operator, which is what we're looking to do. And if we capture just half of 1% of that, that's $90 million just for being a node operator. I just got back from Vegas. Literally, I was supposed to be back Sunday night. My flight was supposed to be, so I was there Thursday to play a poker tournament. Tone Vase, Charlie Lee's brother, Bobby Lee, he's the creator of Litecoin, and some other names that were there. They invited me to play this poker tournament. It was a private poker tournament. I thought I'd win this tournament because I played the most years of poker, but I think I was 80th place out of 100, so I was very disappointed. But it was great networking, and I got a chance to talk to a lot of folks out there, like-minded individuals. There were a lot of Bitcoin maxis at this, Bitcoin will solve everything type of folks that were there, which is fine, right? So there's at least they're into the crypto space, even though they don't believe in Ethereum and Cardano and some of these other proof of stake. But got a chance to, like I said, to talk to a lot of folks that about Crypto World. So we're kind of just getting the word out. For folks that are new, we've been open August 24th, so we're still very young, and I think that there is a strong future for what we're doing here. Before, it was kind of one of those things that it was a dumb, stupid idea that we didn't know, because we're the first ones. We didn't know how long it was going to last and what was going to happen. But we've been able to pivot many times, and I think with the staking and the selling of the miners and things like that will be able to help support the education that we're looking to do. We also started a nonprofit foundation called Crypto Without Borders Foundation. And I had a sheet here. But anyways, so the foundation is to be able to apply for some of these grants that are out there. A lot of Crypto.com Foundation, Ethereum Foundation, Uniswap. There's so much money out there for education in the crypto space. So we're looking to have the foundation apply for these grants. And then down the road, we're hoping to, once we get funded on that, we're hoping that we can offer free classes here at the store, right? So we get people in, hey, it's a free class that the foundation is paying for. All you have to do is buy like $20 worth of Bitcoin from the ATM, right? And put it in your wallet, so that's you still have $20 that you own. It's in Bitcoin though, so we're hoping to get more people, just learning about how this works, and it's simple as just buying Bitcoin. So that's the plan for the foundation. We're working on the website. I have an executive director that's very passionate about this space. You guys might have met him, Andrew McDowell. He talked about beefy finance. Okay, so some of you guys might know him. He's very passionate about this, and he stepped up and said, "Hey, I want to be the ED for this and get this thing going." So we're working on the website. We got 501c3 filed, 501c3 status filed. We're hoping to get that paperwork in place and filed within the government, and so you'll be hearing more about that. So that's a little bit about what we're doing here. I'm sorry, I didn't introduce myself. I'm Jeff Wade. I'm one of the co-founders of Crypto World, and we have a special guest today, Matt Miller, with TYR1 Financial.
TYR1 Financial.
TYR1 Financial. He's going to talk about staking, and which, like I said, I'm very excited about because it's something hopefully we can implement within Crypto World as we open up more locations. But Matt, I will let you kind of introduce yourself and talk about, what you guys are doing.
Alrighty. Hi, everybody. I'm Matt Miller. I represent TYR1 today, TYR1 Financial. That's a company I co-founded. We're a yield as a service provider. So basically, I'm sure you've seen yield aggregators or optimizers maybe in crypto. We basically do that job, but we have a team to help manage our plays. So we're looking for the best yield with the lowest risk. And depending on our clients' needs, we make a plan for them based upon their personal risk tolerances and what type of potential yields they're looking for. We can do stable coins, non-stable coins, and we're familiar with 3 of the networks, AVAX, Phantom, and Ethereum, and we have specialties in pretty much all the rest too. But those are our 3 main ones that we focus on, and we get the most yield from those pretty much.
Is that what first tier does?
What's that?
The first tier, they help you stake.
I've never heard of first tier actually.
The company you co-founded, right?
Oh, TYR1.
Tier
Sorry.
one.
Yeah. Yeah. So we have clients, and they either have existing crypto portfolios, and in that case, we can help them optimize their picks. So if you're going to hold, let's just say Chainlink, for instance, for a year or 2, maybe you're committed to holding it. Well, we can help you earn interest on that. There's a couple of traditional players like BlockFi and stuff that offer similar services, but they're able to offer you that service because they're making a cut off you. If they're offering 5%, they're really earning 15%, and that's how the business model works. We have a much smaller spread, so we pass it on to the client. Maybe you can earn 12 or 13% on your Chainlink instead of 5% on one of these traditional platforms.
Okay.
Yeah. We have 3 main sections, basically. We do liquidity provision. That's probably the least risky, but it's also lower yield. We do straight up staking, which is single-sided. So basically, with liquidity providing, you need 2 different assets, usually a 50-50 composition, like Ethereum, Chainlink, Ethereum, some other coin. With staking, you only need 1 coin, so it could be just Chainlink. So these offer some different risk profiles, basically. Holding 2 coins can lower your risk, especially if one's Ethereum or a stable coin like that. Versus staking, you can be more capital efficient. If you only have one coin, you can still earn the same yield, but you're exposed to the total risk of just one coin. So it changes your risk that way. But those are and then the third one is options. So we also lend out to option markets. That's pretty new in the last year, I would say. Options have really picked up in the crypto space. So just like traditional markets, you can sell covered calls or just participate in normal opportunities to bring yourself delta neutral. Go long and short at the same time, creating your spread. That's super nice when you're yield farming, because if you can put yourself in like a delta neutral position, basically where you're not exposed to any price momentum either way, you can just capture that interest rate that they're offering. So it protects you from price fluctuation, but you still earn the yield. So that's kind of newer this year. That's kind of become a little bit more of our focus. Those are the three main types of yield we focus on. And from those, we look at a variety of networks, but focusing specifically on Phantom, Avalanche, and Ethereum this year. Yeah. Any questions?
Do you have a wallet that you put the coins in, or how does that work? You
So
guys transfer them to you, or do we have our own wallet?
Yeah, we have a variety of wallets to split up risk, and obviously, if at a certain level, we'll set up a personal wallet just for your clients, and at the smaller level, it's in a group wallet that saves on gas. So a lot of our clients have liked the fact that they can get in with a smaller buy. A lot of these companies require you to have like an initial buy of maybe like $50,000 to join or something like that. We have like a much lower limit, just $1,000. But you can't really play with $1,000, especially on Ethereum, like the main net, because the fees are just far too high. So by pooling all those small investors together in one wallet, we can still give them the same strategy as if they were a bigger player. Yep.
So for people that may not know, can you explain a little bit about what staking is?
Yeah. So staking it's a little bit of a game. You're playing with the inventor of the coin. So the creators of the coin, they want to remove liquidity from the network, because the more liquid the network is, it makes it harder for the price to go up. So if you remove liquidity in the form of staking, you cut a deal with your investors. You say, oh, I'll pay you 5-10% a year if you promise not to sell this coin for X amount of time. And so that removes liquidity from the market and helps the price go up instead of having sell pressure from people. That's basically the point of staking. The creators are just trying to remove supply and also just like get some. There's two types of staking. You can have liquid staking where you just put the money on the protocol and you can take it out at any time. And then there's illiquid staking where you actually have to select a time lock. It's moving more towards the time lock in the industry, for better and for worse. But the creators of the protocol and the investors like the time lock because it gives them very predictable emissions. So because everything's on a blockchain, I can see exactly when everyone's coins are unlocking. So, I could look forward a few months and see, wow, 20% of the supply is getting unlocked in this week. So maybe I don't want to be buying that week. Maybe I want to be exiting my position before then or something like that. And people like that information asymmetry. So that's one of the reasons.
Do you provide that signal?
We can provide that signal. Yeah. Most of our projects, we try to stick to liquid staking. That just gives us a lot more flexibility. You got to be it's got to hit way more like notes for us to actually lock you up for time, because then I have to make all these assumptions that the coin's going to be here in X amount of time versus I could pull out any day as soon as I see like one warning signal, basically.
So how is this staking different, or ultimately different from, say, writing an option with what a peer-to-peer?
Yeah. You can
versus
actually
just trading an option on an exchange.
You could actually write an option off your stake. So let's say I buy a coin. I'm going to hold the coin for a year, so I might as well stake it and earn all the yield I can. Once you stake it, you get a liquid version.
Like a futures contract almost, be like.
Yeah, I could sell.
I'm selling my ability to not sell for X period of time
Yeah, it's a
You
bit
know,
like a covered
month,
call.
a year, or whatever.
Yeah.
And then okay.
Basically, but the advantage is I could do both. So I could stake it up. Let's say I stake it up, I get the S version, staked version. Let's say S link. Then I could take that S link, which is now a collateral. So, and I can trade that. I could write an option on top of my collateral. So, you're lending it out multiple times. It's kind of creating synthetic versions of the assets, for better or for worse.
Yeah.
But it's an option you can do actually. And then I get to earn the yield, and I could sell the covered call option on the synthetic version of the asset I own.
One other question: what's the YouTube channel this is being broadcast on?
Just our crypto.com or crypto world.
It's just your
You go to our
channel is
website.
Crypto World.
Yeah, if you go to our website,
Okay.
there's a YouTube live link.
Okay, great, thank you.
So yeah, the disadvantage though of staking is obviously you're exposing yourself to one asset. And for the most part, these assets are pretty new, especially if you're wanting a higher yield product. They're going to be on the newer end. That means they're paying you the high yield because they're newer, because they don't have trust, they don't have faith. The only thing they can offer you is money. So we like liquidity pools for the risk profile a lot more than staking. If you find one coin that's great, and sometimes it works out for a portfolio, with the liquidity pool, you have to maintain this ratio. So we can't there might be an asset we want to start earning interest on, but we don't have the equal amount of money in Ethereum just sitting on the side ready to go. So it's not an option. So that's where staking can be capitally efficient. If you don't have all these different coin types, just one, you can earn an interest in staking. If you've got both though, you might as well do liquidity providing. So I'm sure most of you are familiar with like ETH 2.0 and how you can stake your ETH and earn interest in a node. I think the interest on that fluctuates from 6 to maybe upper bounds near 20%. That's what I've heard. I don't have a stake myself, but you can earn far more than that in an LP position with your Ethereum. Now you have to put half of it at risk with another coin. So let's say Chainlink, but it's 50-50 Ethereum, 50-50 Chainlink, and that pool might earn 40% APY. So now I'm earning 40% on my Ethereum, and I didn't have to lock it up. And I didn't have to have 32 Ethereum. I didn't have to lock it up for the ETH 2.0 time, and you'll earn more interest. So that's why we favor liquidity pools over staking. And there's even these new composable pools that don't require 50-50 ratio. If you've ever heard of Balancer, and there's a few forks of it now on different chains, you could do 80-20. So if you're way more bullish on Chainlink and you don't want to be diluted by your Ethereum, you could do an 80-20 pool. It means you basically could only be diluted X amount, the 20%, and that's more favorable if you're bullish Chainlink. The downside of liquidity pool is as one asset rises disproportionate to the other one, it's going to be selling that to maintain the ratio. So you're kind of dollar cost averaging out of your position every time there's a big spike. And that's a good and a bad thing. Just depends on the direction of the coin you were holding. It'll kick you in the teeth if you bought the coin to go up, and then it's constantly just selling your coin, the good coin, into the bad coin, basically, that's not moving. That's kind of the downside. But you get less volatility that way when you split the assets in half. Yeah. Anything else?
So the IRS puts a limit on capital gains before they step in and want you to declare it. How can you maybe talk about that?
Oh, we declare all our capital gains. Yeah, there's no limit. We follow. We're trying to be fully compliant and build that history up with the regulators from the beginning. Yeah. So all staking, by the way, there was a big clarification earlier this year on claimed income. So staking, when you claim it, it's going to be declared as income according to the IRS. That's how they want it, not as capital gains, but as income. So that may benefit you depending on your tax bracket versus your short-term capital gains can be an advantage. But yeah, we report everything. Yeah, and it is a pain. Some of the accounting can be pretty tricky on especially the further end you get on this risk curve, the newer the protocols, the less software can track it, the more manual stuff you have to do. So
Do you anticipate the rules changing on a regular basis?
I believe everyone's hanging on this new. There's supposed to be regulation coming, like in the weeks, maybe even next week, even at the earliest. So something's coming. I don't believe it's going to drastically change the industry. I think that was a big clarification with the staking as claimed. There's also this concept of rebasing. If anyone's familiar with rebase tokens, where it's very dilutive. So you're just earning like fractions of the coin every single day. I think they tried to say that that's equivalent to a stock split. So that's an interesting ruling too, versus like buying new coins. It's going to be considered basically a stock split. So that presents some interesting things as well. But yeah, definitely a lot more. I think a lot more clarification is coming down the pipeline. A lot happened this year, and I think it's only going to get more well defined in 2022.
Would you classify that as risk?
Yeah, I would classify that as risk. The thing is, I don't see a possibility that regulation is going to. I don't think it can kill the space at this point. I think we've built up to a critical mass where. I don't think they want regulation to kill the space. For one, there's like a significant U.S. lead in a lot of these technologies that I think a lot of the senators and things are realizing now that it's an advantage for us to have crypto innovation in the United States versus it's just going to go overseas if we don't. And then I think also there's a lot of people I think a lot of very wealthy people took positions in crypto in the last year and the year before. And the more people that take positions, the more that works as kind of a lobbying group. And there's just less incentive to crush the space when he owns it. Why are we killing our own investment? Especially when they can rationalize it in so many other ways, why it's a good thing to keep the space live in the United States. Yeah. So I see it as a benefit. I think, and the larger the investors, the more apprehension they have about regulation, and the more clarity they want before they invest. So as these things come out, I think it's only going to attract people who are forced to like maintain these high standards. Several companies and treasuries, they can't invest until certain things are hit because of their compliance department. They're bound by these mandates. They can't invest in assets until X decisions or clarity has been put into place. So it could open somewhat of a floodgate for these, people have been talking about these corporate treasuries and things, adding Bitcoin, especially last year. That was a big narrative. More regulation, I think, will help. If we're looking for corporate buying and like big institutions basically that have to, they're dealing with their compliance departments and their HR departments, and they can't be on the wrong side of this. Basically, they've got to wait. They got to see all the cards laid out, and then they can invest.
Do you have that kind of client?
Sure.
I was going to add that with the fear of regulation killing the industry is that you keep in mind that there's selfish motivations on the part of the regulators themselves. Is that if you kill the industry, you have nothing left to regulate, and then you get your pink slip.
I even saw. Unfortunately, I think it's becoming politicized, and I don't know if that's a good or a bad thing. I even saw an ad for a Ted Cruz campaign video. I don't know if any of you saw this. Yeah, he's praising Bitcoin now. He even read there was like some email from some Canadian crypto exchange or something that they sent to the government basically. And it was like, we familiarize yourself with like, decentralized technology. We can't restrict our clients' access to buying or selling. We can't restrict our clients' access to sending, and like we'll still be here when the Canadian dollar collapses or something like that. And that was his whole thing, and it's just it's shocking to see these like really mainstream politicians now taking stances on. I mean, Bitcoin's kind of the first, right? So that's what you'd expect, but we are seeing politicians publicly not only just embracing it, but like kind of claiming it now. I think you're seeing the right try to kind of claim this as an issue, for better or for worse, as you get bipartisan politics come in. But I think it's going to be a mistake for the left if they don't also embrace it in a political way. It's only going to burn them. There's a lot of single issue voters with cryptocurrency. They got a lot of their money in, and they better not vote the wrong way on it. So if you're against cryptocurrency, it's going to hurt you in the polls, I have a feeling. So yeah, I'm definitely seeing it's just this year it's gone more mainstream than I've ever seen since getting into the space. So
We're also in an election year now, so
they can't
a
be
case
too
to be made.
controversial. Yeah,
Yeah.
exactly. So that's why I'm a little bit dovish on regulation this year. I would say I think they're gonna pull any punches, especially with how the market's looking right now. Maybe they would have been a little worse at the peak to like knock us down a notch, but we're at these lows now. Some of these guys have got investments too, and I don't think they want to be the death punch that breaks 30,000. I don't know if anyone's tracking that, but it's like the line in the sand, basically, from what I've been seeing.
Yeah, to add on that, we had Eric Schmidt's office, Carlos. And he's for those that don't know, he's a Missouri Attorney General for the state of Missouri. But he's running for Senate, U.S. Senate. But he wants us to help him set up a crypto donation page. So he can set up Bitcoin and other coins for his campaign. We're also tied in with Taylor Burks. Taylor Burks he's running for a House seat. He's favored to win that seat, and he has his campaign accepting donations, crypto donations. And last time I checked, he raised probably $550,000, where the next closest one was about $140,000. So he has outraised anybody that he's running against. So, with Eric Schmidt, he's also asked us to help him write a crypto white paper. So he's looking to make a big splash his campaign. So, I mean, you're seeing more and more politicians realize that the voters own crypto, and they want to find ways to be able to get more votes and also find ways to help with their campaign.
I think it builds engagement too.
Yeah.
It's like very, it's something, right? I'm
Right.
buying my politician's coin, whatever. I feel like I'm contributing so much more maybe than if I just wrote a check. You kind of see the chart maybe. Oh, wow, it's election night. The price is pumping.
Well, we're also, we're talking to them about creating a NFT for some of their events. Those big ticketed items that they do, $10,000 plates or whatever. So we're trying to find a legal structure, a way to be able to create NFTs for them. But as you guys know, with NFTs, you can set it up to where a percentage up to 10% can go back to the creator of the NFT. So imagine if a PAC maybe has rights to it, and if Donald Trump, nobody thought he was going to win when he first ran for office, right? But he did win. So maybe his NFTs then for his events becomes tradable, and people are wanting that, like pins, like collectible pins.
Yeah.
So with an NFT, you can set it up to where up to 10% can go back to the creator for every time it gets traded. So now that NFT of Donald Trump that was set up could definitely raise a lot of money. If the PAC owns it, maybe the Republican owns that NFT. So 10% every time it gets traded goes back to the PAC. So we're trying to think of some creative ways to be able to, and that's what the foundation is looking to do. We're looking to help in those ways to raise funding for folks that are running for office that support crypto. So education and so forth. But yeah, I mean, that's very interesting you speak about that, because it's something that we're working on.
Yeah, and fundraising is just one of the greatest opportunities that crypto provides. You were talking about an ICO maybe for crypto world. One of the newer structures I've seen, probably in the last even 6 months, that's starting to grow in popularity. There was an ICO, then there was a whole bunch of different like little terms. They're basically just IPOs, but now they're doing these donation events. I don't know if you guys have seen it, but hey, I donate instead of being on the white list and getting a seed investment. I just donate right away. So maybe I'll give up 1 Ethereum. That's a tax write-off right off the bat, and then I'm reimbursed with this token at the end. Nothing to do with the donation. It's separate, legally speaking, but you get that tax write-off, and the company that started it is not liable for offering a security or any promises like that, which the problems came in with ICOs. That's why pretty much it was like a 2017, 2018 thing, and then ICOs got shut down pretty hard because they're basically IPOs, and it fell right under the definition of like launching an unregistered security. But yeah, donation events, that's another just fundraising opportunity. You were talking about with the campaigns, they could donate to his campaign and get a commemorative NFT. They get to still write that off like they're doing with their donations, like at the $10,000 plates. But they also get the NFT. So that's been a newer model, and that can cause, I think it's a good thing because it can save you a lot of tears. A lot of projects you invest in early on, they can go completely bust. So at least you got the tax write-off right off the bat, instead of having to bag hold or then sell your coin down to get the tax write-off, essentially. But yeah, so the industry is just rapidly changing, and they keep finding new ways to stay compliant. Yeah.
Returns for your company are based off individual investment. What would an investor pick which chain they want to be invested on? Are you guys the ones that are searching for the highest yield? Or?
Yeah, so it's absolutely up to the investor. We have a few that like to be way more hands-on. They might bring ideas to us that we kind of vet for them. Okay, this is good, this is not, let's do this for you. Or maybe it's just they don't want to fool with the technical skills. They just see, I want to invest in this, and we'll just do it for you behind the scenes. So it definitely varies by investor, but we can do both options. And most definitely just want us to handle the optimization. They don't care about the chain. They usually don't even care about the coin that much. We kind of set these risk parameters that they're comfortable with, and as long as they're staying within those parameters, they're comfortable, basically. Yeah. Anybody else? Go ahead.
What sort of fees do you guys charge?
So we charge a traditional 2 and 20 plan, just like a hedge fund. So that would be 2% of capital at the end of the year and 20% of profit, essentially. And now that changes based upon the investor type. We have a few different like account versions, and the fee structure changes. There's a more aggressive plan that we take a third of yield from. That's probably our highest fee tier structure. But that compensated by you earning much higher yield. So we take a larger cut, but it's only because the customer's earning a much higher interest rate, basically. So yeah, traditional hedge funds prices and compensation, basically.
There's a question here on YouTube. Is there a way to stake XRP? Is there a way to stake XRP?
Stake XRP. I'm sure there is a way to stake XRP. I'm not familiar with it. Yeah.
What is
XRP? It's a token. It's like 2017. No, I mean it's way older than 2017. It's the legacy top 10 coin. It's always been in the top 10. It just hangs around there. It's a interbanking transfer coin, basically, back when that was a really hot narrative. yeah, they were able to secure partnerships with many large banks, and that's kind of their claim to fame. Instead of using Swift or like these interbanking systems, you can use the XRP network to exchange value. It's far cheaper for the bank. That's kind of the narrative. Recently, they've been embroiled in this massive lawsuit, and that's the only thing that's kind of like controlling the price, I would say, at the current moment. I have heard that they're going to win their lawsuit. I don't know if that's true, but that is the rumor on the street. So
You see the Russians using XRP?
I did not see that. No, that's
I said asking. Do you see?
Oh no, I do not. I think they're going to stick to Bitcoin and gold.
I don't
But-
see anybody using XRP.
Yeah, it's for banksters, man, on YouTube. But hey, if you are looking for a staking opportunity, there might not be a staking opportunity, but there certainly is going to be a liquidity pool. So if you have an equal amount of Ethereum at your disposal, you can earn interest on your XRP. You just need to deploy it. So Uniswap, for instance.
You familiar with the Cosmo stake?
I am, yeah. That's something we're kind of just looking into, actually. I know that's been getting a lot more popular probably in the last like 4 or 5 months. But yeah, that's one of those
The what? What is it?
Cosmos.
Adam?
Cosmos, yeah.
Yeah.
What about it?
The staking pools that they.
There's just a bunch of liquidity provision options on there, and all these L1s, you could call them, that are popping up. You got there's other ones too, even like Oasis, Near Protocol. All these, they need liquidity, and so they offer pretty high yields, especially early on. Like Cosmos Atom, they have some very attractive staking opportunities on there now if you bridge over there. And it's always a supply and demand thing. All these L1s are like these little pools, and they're all isolated from each other, right? And they all need their own liquidity. So you can move your liquidity from an area that's saturated to an area that's barren, and you can be the one to benefit from being first, or at least early. I'd say Atom's still fairly early in terms of saturation of things. Definitely, our main specialty is Phantom and Avalanche, and those are definitely further along now in their like maturity. The yield is not as readily available as it once was. The bigger these chains get, the more popular, the more TVL they lock in, the more sophisticated players come in. The more you get even like traditional finance players coming into play. And like I said, it's all supply and demand. So you get a few of these big players move into your pools, and the yield's going to go way, way, way down really fast. Especially the most competitive thing right now is stablecoin yields. Obviously, with the market the way it is, everyone's been moving into stables, and the yields have gotten really competitive. Like we'll watch yields go down by 50% in a week from a new pool entering. So it requires like a lot of rotation right now. If you want to keep your interest rate above 10% even, that's like what we're targeting. It's very, it's like good for what we're targeting now. But yeah, truly stable coins are very, very competitive right now. And yeah, it's becoming tricky to find yield over 10% for sure.
Can you maybe speak on your experience and history in the crypto space and how it led to meeting of your partners and actually founding the company?
Sure.
And how long the company's actually been in business?
Yeah, so I actually got in at probably the worst time in crypto, 2017, peak of the market. Me and my best friend, we had been very into investing since we turned 18 and had been playing in the stock market ever since. And he was the one who finally convinced me after months of watching Bitcoin and this Ethereum go up and up and up. Finally, I'm willing to get out of my safe stocks and dabble a little bit. And yeah, worked first month or whatever. I feel like we doubled our money or something, just crazy euphoria. And then boom, 2017 bear market, Bitcoin goes from 20K to $3,000 brutally. I remember one day it was down 50% in one day. I don't know if you remember. That was like the March 2020 crash or something. Just devastating. But you learn a lot about emotional control during those times, and just everything like that. And was never too deterred. Spent those the years between 17 and then the next run just acquiring more crypto personally. me and my friend. And then right when this run first started, basically, we wanted to rotate out of Bitcoin. So we created the fund to save on fees. Even at the time, fees being like $50 a transaction were bulk, like we would bulk at that, especially coming from like Robinhood and things where the fees are free with the spread. So we created the company to save on fees. We had a lot of friends who were interested. Oh, wow, look, you've done so well on Bitcoin. We want to buy. What's the next Bitcoin, right? That's what everyone wants to know. So we created this pool product, basically a collection of coins, basically a basket of coins. And then our friends and family just started investing in that. Basically, that would give people like a variety of coins in their exposure. And the big draw point was we would charge no fees at all. So anyone who wanted to get in on their own, they knew that to buy, every single coin, $50, $50, $50. Here, we can give you access to this basket, 0 fees for you. If you come with company and you stay for 4 months, I think that was the original contract. So that was pretty popular. And we built up our initial client base from there. And then since then, we pivoted really hard into staking because we were getting all these coins and we might as well start earning interest on them. And yeah, that's basically since this run started, I don't know, 2020, I guess the run started. You could say since the $3,000 bottom we've been running. We've been in altcoins since they broke back above 20K, I would say. And it's just really specialized down in altcoins. And that's kind of what our investors want. As crypto became more and more mainstream, being able to buy Bitcoin or Ethereum for our clients wasn't attractive anymore. That's very mainstream. Any platform can do that. So our specialty became newer investments. We can get access to these seed funding rounds, these white lists, these investments that you would have to spend hours and hours grinding in a Discord or networking to get an opportunity to invest in these like preliminary rounds. And that's kind of where we pivoted to in the last 6-8 months. And then staking in the last year has been huge. That's, in markets like these, we can tell our clients, you were going to hold these coins for this period of time. Look, it's like your dollar cost averaging in. Every week you're earning more of the same coin. You're getting to lower your average. At least you're not just holding, basically. So that's kind of our pitch.
And we got another YouTube question. What
Okay.
makes Phantom unique?
What makes Phantom unique? Phantom has very low fees and the best farming experience on any chain, I will say. There's just a variety of protocols on there that optimize farming, and with the fees, it allows you to collect your rewards more often. So if you were staking on Ethereum, for instance, let's say the transaction fee is $50. Well, my yield is going to have to be multiples more than $50 for me to claim it. And you're only earning X amount per day. So maybe you're earning a few $100s a day. $50 is significantly cutting into your profit margins if you're collecting every day, right? That's $50 that you don't have that you could have just by the fees. So if you switch to Phantom, where the fees are 10, 15, 20 cents, per transaction, I can optimize my yield because everything's about compounding. So if I'm earning $100 an hour, I can afford to claim every single hour now and reinvest. So that 100 starts earning interest, compounds. The next day, the 100 starts earning interest, So it's for the compounding and the optimization for the cheap fees and also the farming opportunities. We really like Avalanche too for the fee structure, but the farming opportunities are just not quite as good. They're there, but they're certainly like one step below Phantom, I would say, just in terms of pure variety. But yeah, Phantom's our favorite currently, even with, go ahead.
I know you were talking about the spread being a little bit difficult to be above 10% right now. What are you seeing as an aggregate return that you get on the 2 and 20?
2 and 20? It depends wildly by investor. Some investors are down, some investors are up, and it pretty much depends on when they decide to give us the money. If you invested 3 months ago, those investors are down. There's just no way to have made the money when we were buying altcoins near highs. They wanted the investment, so we gave it to them, but they're down. So it varies wildly, I would say. Early investors are up far more, so it's going to skew the numbers a lot to an average, but higher than the stock market, higher than what they think they can achieve just by holding Bitcoin. Our main targets are we're trying to outperform Bitcoin and ETH. We want to get our investors more of those two assets. These like harder assets, basically. So yeah,
It's a difficult.
it is. Yeah. But yeah, we definitely a variety. These last few months have definitely been difficult. If you invested in the last 2-3 months, you're probably down pretty bad if you haven't been yield farming or lowering your averages or something like that. But for you talking about earlier, the stable coin yields really probably like before the market crash, I think you could probably target like an average of like over 10% you could get on stable coins. So like some clients might just want to invest, it's like a cash account, right? They're earning far more interest than in the bank. But 6 to 12%, I would say. And then now probably skewing lower, with 10 being your upward bound. But that should change. When the market picks back up again, the stablecoin yields will go up, and as money rotates out of stablecoins, that's just kind of how it goes. It's all about supply and demand in crypto. Every single thing is supply and demand. Being able to calculate supply and demand locally is super. That's an advantage. If you just like want to find 1 or 2 pools and you just really track them every day, you can kind of get a much better sense for where the yield is going to go, because it fluctuates over there's a little bit of a lag, and you can take advantage of that opportunity. There's still a lot of inefficiencies in crypto, and truly the smaller player you are, the more opportunities you can take advantage of. You can move in and out of any pool without changing the price too much. You can take these arbitrage opportunities over and over and over again without destroying the opportunity. The larger you get, the less your opportunities become, just because you affect the price just by coming in. So you have a lot of flexibility when you're smaller, I would say, for sure. Anything else? I answered all the questions, man.
Well, here's another one. Do you know of any gaming cryptocurrencies that they can stake?
I mean, most of them will let you stake them on the platform, I believe. You got your traditional, your mana and your, sand. Hard to say. It's, I definitely think GameFi is going to have a recovery wave for sure. But I don't know. We do not focus on GameFi at TYR1. DeFi is our bread and butter. But it's certainly very interesting. If you have the time to play the game, it's a revenue stream. And I do know of several high net worth individuals who are very interested in the retail or the real estate game in some of these metaverses. So there is money going there. So I can't say that.
I got a question. Can you stake NFTs?
Yes, it's super. Here, check out. There's a company called Revest. Super new, but they're something we're really interested in. They have this technology to allow you to stake NFTs basically and financialize NFTs. Really, that's the best. It's the best. It's better than getting a synthetic token. It's more tangible, I would say, and it allows for the secondary markets to be created, which is like. You want a secondary market to be created around your project. It adds a lot of liquidity and supply and demand, I would say. There's a number of it where even there's some NFTs that allow you to rent them out now. I don't know if you've heard of that, but people will pay you an income stream in ETH to use the NFT. I really think every single type of financial contract could be turned into an NFT. All the terms, the deals, and everything, along with like interest, could all flow to the NFT. It's a wonderful way.
Have you done your own project?
That's in the works.
Really?
Yes.
Can you tell us a little bit about that, or is that kind of down low right now?
It's kind of down low right now. The project is mostly focused on tokenomics. So it's basically it's just kind of a unique take on distribution models. I don't know if any of you have heard of V33 or any of the situation that happened with there in the last week, but no, good. But it borrows some similar mechanics to that. We're very interested in the voting escrow model. That's what the VE stands for. Voting escrow. So yeah. Without saying too much, you can lock the token and earn. It's like staking. It's a much better form of staking.
What would you say people usually look for when it comes to buying an NFT? Is like the stake yield there?
No, really. That's what I look like when
what do you look for?
I look for a financial incentive. That might not be the best because obviously there's like NFTs. You should just buy them because you like the picture, right? Or you like the community. The company doesn't invest in anything like that, but we do have a few investments in financialized NFTs. The majority of the NFTs we own are connected to whitelist opportunities. So basically, in order to get access to the whitelist or to participate, we bought an NFT, which was basically like a pre-sale investment, and then we get airdropped tokens when the project launches.
Did you have to go through that Discord and grind on
Yes,
there? That's
yes.
a pain.
Well,
I have not minted because of the Discord.
We put together a team to do that, so it actually requires a lot of man hours. It's kind of funny what you go through sometimes to get some of these investment opportunities. It's ridiculous, yeah.
Do you think there's an easier way to do it than the Discord?
See, I like it because I call it they have proof of stake, proof of work. This is like a proof of engagement, right? So like they call it talent farming. So it's these DAOs, right? It's kind of a flat organization structure. There's not an existing team. They need to bring the team out of nowhere. This like competitiveness in the Discord, I think it does lead to the people who are really actually want to be around staying, because like, bro, if you make it to the end of this process, you've spent weeks and you did research. You might have had to make papers up to promote the project, all kinds of things. And I feel like you're much more likely to stick around with the project and also like work for free you've already been basically working for free to get that whitelist spot. So yeah, community mining, engagement farming. I think I really like it. There's a number of Discords that have done that exceptionally well in the last couple of months. Yeah.
Can you stake in a charitable CRT? What's it called? Charitable.
Can you stake?
Yeah.
Sure. There's a few coins. You stake it, and they take a percentage of the interest, and it just goes to the charity that they predetermine, basically. So yeah, it's completely possible. Yeah.
I guess with a CRT, you avoid paying any capital gains. So you can basically do any trades whatsoever.
Yeah.
Trust.
Exactly. The CRT is basically to never have to pay capital gains tax.
Right.
And
Because you use it and it's yours, or whoever the entity is that has created it. And then whenever you die or it's dissolved, it just disperses out to those charities, which for all you know, may actually be run by somebody but nonetheless, as long as it's going to some 501c3 or plural, then it's exempt.
We should
it's
set that
forever
up.
exempt.
We should set that up with the foundation and have
Yes.
Exactly.
be the
Yeah.
beneficiary,
Perfect.
right?
Yeah.
Because all those claims, like when you're claiming,
That's why.
well, it's annoying from an accounting
Capital gains
perspective,
is a
but
joke.
because it's an income, income can be taxed highly.
Did you see the article in the Nashville couple that sued the IRS for because they were with staking rewards?
Oh, that is actually why the case. I think that was the case, wasn't it? Yeah.
Yeah.
Mhm.
So I think the IRS is fighting back. Last time I heard, so
It was like a marginal sum of money, I believe.
Yeah.
It was good, good for the community that they took out this initiative and just kind of like got the legal precedent put into place. The more people that do that, the better. I think that it's kind of one of XRP's goals. They're either going to be the martyr that dies on the hill, or they're going to prove that they were not an unregistered security, and that kind of will help all of the ICOs from that era thrive, I will say. That's been holding back a lot of, we were talking about high net worth investors having these compliance teams and things. They just can't invest in products that are ambiguous like that. So if you're a billionaire, you want to invest in XRP, well, your HR department is saying, no, there's this lawsuit. They're being called an unregistered security, way too much risk. We can't be seen delving into that until this is established as precedent, legal precedent. Then now we can move in.
you see, because of Russia being pulled out of the SWIFT, you see Biden administration having more clamp on cryptocurrency as a way around.
Russian Ethereum.
Yeah.
It could, unfortunately. That we follow the markets really carefully. The invasion was a big down candle if you're watching Bitcoin, and then only to be picked up a day later with all this news of the oligarchs buying Bitcoin and diversifying some of their portfolios into there because of the SWIFT restrictions, and also their currencies collapsing. So really, anyone with crypto is doing much better in Russia, I would say, than definitely if they were holding rubles. There was a lot of big buyers from Russia, and it's good. But the problem that you just pointed out is that could lead to us reacting negatively and trying to clamp down more on it because, this is an example of how they can circumvent our control over the financial network. This is, it's kind of a public humiliation, I would say, for our system. We were applying all these sanctions. If they can totally avoid them using cryptocurrency, that's looks bad for us in our power projection. So yeah, definitely could backfire. I see it on, hopefully it like nets goes to zero and we just get normal prices. But yeah, increased buying in Eastern Europe for sure. I heard the few days ago, the premium for local Bitcoins in Ukraine, it was over 50K a Bitcoin right there. So a lot of people still use local Bitcoins. It's OT, over-the-counter trading. If you don't want to be recorded on an exchange or you want to be a little more anonymous, there are ways to just trade crypto with people in the community. And big premium right now if you're in Ukraine.
We had somebody come in the store that was trying to buy something from Europe,
Mm-hmm.
And they would only accept Bitcoin as payment. So, and this
There you
gentleman
go.
had no clue on crypto. He really needed to buy this product, so he came in.
You came here to get Bitcoin.
Well, he came there, took a class on understanding why, and then we did a one-to-one with him on how the process would work. But yeah, it's interesting what's going on in Europe, both the bad and the good.
Both the bad and the good, and even there was this whole thing with did anybody hear about the Ukrainian airdrop? There was supposed to be like some airdrop. It didn't go through, but it would have been a first in history that a government would have done a crypto airdrop to its people. I mean, that regardless of the success, I think that's a moment in history. The fact that it was proposed and almost approved is still big. And also just it's being used as like for better or for worse, a wartime funding tool. I heard many millions went to the Ukrainian army and things from crypto donations. So we're truly seeing this technology kind of evolve and come into its maturity, I would say.
I got a question.
Yeah.
How did that affect the market when they had that proposal?
The NFT airdrop, it did not really affect the market very much. Unfortunately, Ukraine is just not compared to all the other geopolitical factors. Like Ukraine is one of them right now, but like it's almost like they're not in control of the geopolitics right now in Ukraine. It's like whatever Russia and the US determines around Ukraine is going to move the markets. So no, it didn't really move the markets. I probably led some increased donations to them by people. And I mean, if they do it, I mean, it's commemorative, right? It's the first NFT from a government. It's also like there's like this whole concept of like wartime memorabilia gaining value over time. People were bringing that up. This would be like a war memorabilia thing from commemorative. So yeah, I definitely think it could have moved the markets if it's successful. Definitely the NFT market could have given them a boost. I think that's been cooling off the last couple of weeks from what I've been hearing. I know you got another K-Dev or whatever, the other NFT guy here. He could probably tell you more about that. But yeah, it's certainly interesting the way just the language around it and how quickly the Ukrainian government embraced the technology and NFT airdrops, all these things that you never in a million years would think a government would be doing. Here we are, living it. So who's the next government,
The people.
the people. Yeah.
Should be.
Yeah, I would not be surprised to see like some South American governments or something issue like NFT bonds or something. I know the Salvadorians are doing these volcano bonds and things. I'm sure you'll see more take suit if that's successful. Yeah. Anything else?
On that last point you just made, if governments get in the business of bonding out via crypto, do you think that really waters down the crypto market? Or because if they can use cryptocurrency as a try to put it politely, to just further their own spending sprees, then how does that, if they could basically just split off the
money and buy
blockchain,
crypto.
just say, well, look, we've got our own, say, Salvadorian
Mm-hmm.
coin, and now we're going to split that again because, well, our treasury's running dry and we need to do it again and then again and again.
The problem with
Which is the
synthetic
exact
assets.
same problem that led to the development of cryptocurrency in the first place.
Yeah, definitely you're going to see that issue if they start making their own coins or derivatives. I think with El Salvador, they're pretty much 100% committed to Bitcoin. They're not going to make a new coin. I definitely think the US is going to make their own coin.
Yeah.
China's making their own coin. In fact, there was the Russians announced they're doing a CBDC, the central bank digital currency, like 2 weeks ago or something.
Is the safeguard, though, then that people can always trade back out of it?
I think so. Also, the bonding space is becoming more competitive. There's been a few entrants into bonding this year with like crypto native bonding. So I anticipate like full on bond markets coming to crypto in the next year. So if they can jump on that before any government gets onto it, it's going to keep a lot of the money circulating within the system instead of exiting, basically.
Right.
Zero coupon bonds coming next year, or this year rather. Yeah, exactly. That actually will change our whole industry too, because you earn this interest rate. It's going to switch to a model of buying a bond with a fixed timeline. So I earn the interest the whole way, and I just need to. It's all about picking your exit time.
Yeah,
that's what it's going to turn into. Yeah.
Originally, the Russian central bank said they were absolutely not going to do crypto. And as soon as it came out that they were going to get kicked out of SWIFT, they changed their mind.
Well, here's what I heard about that. So the central bank of Russia does not want crypto because of the central bank of Russia, and their power comes from being able to print rubles and things like that. So they recommended to the Russian government not to do crypto. That was their official recommendation. Now, Putin and his whole wing have significant investment in cryptocurrency. And there's significant Russia is one of the innovators in cryptocurrency, hands down. I mean, you've got Vitalik. I mean, he's obviously, migrated and things like that. There's a lot of tech talent in Russia focused on crypto, and Putin knows that. I've seen unofficial reports where they have upwards of 100 billion in crypto on their balance sheets and things. So I'm sure they took that and they said, "Thank you for your consideration. We're already all in." And this is happening. So, yeah, I think the central bank didn't want it, but the oligarchs and the powers that are in Russia have a very big financial interest. Obviously, they probably were anticipating the war coming and everything like that, and they don't want to give up that tool really that they have. So, yeah, I think that's I think every central bank will probably recommend against it. Yeah.
All right. So Matt will be here if you guys want to talk to him on the side. So I just wanted to, if you guys could just follow us on social media, Twitter. Most of our handle is Shop Crypto World. And we'll share Matt's information on that. Some of the things that some news from Crypto World is we just brought in Rudy. Rudy he's been in the Navy for 14 years. He's a cybersecurity expert. And he actually has a program that one of the, I can't say which one, but one of the government agencies is using his cybersecurity program. He called it the Kraken. So it's pretty impressive. I spent time with, he's out of San Antonio, but you'll be hearing from him probably at one of these Crypto Over coffees. We also, this is Charlie Lee's brother. I met him, and Charlie Lee's the guy who had been Litecoin. But Bobby Lee's the creator of Ballet wallets. So we carry the Ballet wallets here. So we're looking to utilize Ballet more because it's a very simple wallet. I wouldn't say it's a top wallet out there, but as far as for early people getting into it, it's probably one of the easiest. So they're looking to white label their wallets.
Did you give Charlie some crap for selling his Litecoin at the top?
No, I didn't. But,
Man, that was funny.
but supposedly he sold all his Litecoin. So
yeah, he sold it all, and then he announced that he sold it all at the very peak of 2017. I remember it very, very well.
Yeah. So
never recovered.
Right. For those that don't know, we do have a weekly radio show with New Stock STL. Bitcoin and Ben and I just talked for an hour about what's going on in the space. And it's New Stock STL. Here's the station. We do post it. It's on Saturdays at 5 to 6 p.m. is when it's on the radio, and these are the radio stations that carry it. We also post it on our YouTube and our social media. But outside of that, I think that's me in the airport. We also brought in Dan Geisel. Dan is out of Tampa Bay. You guys might have met him. He visited here at the store, but he was responsible for growing one CBD store into 500 locations. So he's handling the back end for Crypto World, and you'll be hearing from him too as we expand and open up more locations. But outside of that, we appreciate you guys coming to our weekly events. If you guys can't make it here, Paul is doing a lot of the live stream on YouTube, so you can watch it remote. Paul is actually he's from California. He's been here for about almost a month. Him and his dad and Ben, I think, are opening up 3 or 4 locations in Florida, Crypto World locations. So he's just trying to understand what we're doing here and also help us out. Follow him. Crypto Xrp is what he goes with on his YouTube and Twitter. But outside of that, thanks for coming, folks.
Oh my gosh. Any more questions online?
No, just asking how has Bitcoin been associated with Crypto World? So I'm answering that question off there.
Yeah.
Okay.
So basic one.
Okay.
Photo op.
Yeah. Take a picture.